the appointment of Farhash Wafa Salvador, former political secretary to Prime Minister Anwar Ibrahim, as chairman of multiple public-listed companies raises serious questions about governance, transparency, and potential conflicts of interest. Background: Farhash served as a key aide to the PM until 2019, holding influential roles in PKR and PERC state leadership. Post-politics, he's pivoted to business, amassing chairmanships in at least 5 Bursa Malaysia-listed firms: Apex Equity Holdings, Excelforce MSC, Key Alliance Group MMAG, and previously 7-Eleven Malaysia Holdings, from which he resigned in May 2025. This rapid accumulation of power in diverse sectors like finance, tech, logistics, and retail is unprecedented for someone with such recent political ties. The dangers start with concentration of power. One individual chairing 5 PLCs means immense influence over billions in market cap and thousands of jobs. In Malaysia's context, where political and business overlaps are common, this setup risks cronyism, where decisions might favor political networks over shareholder value. We've seen historical scandals like 1MDB. Do we want echoes of that? Conflict of interest is a red flag. As ex-Aide, Farhash's proximity to government could blur lines between public policy and private gain. For instance, companies under his leadership have secured major contracts, like MMAG's 732 million Malaysian ringgit Migas supply deal in October 2025. Is this merit-based or influenced by connections? Even perceptions of favoritism erode trust in fair competition. Then there's governance strain. Chairing 5 boards demands superhuman oversight. Bursa rules cap directorships at 5 for good reason, to ensure focus. But juggling Apex Stockbroking, Excelforce Fintech, Key Alliance IT, Distribution, MMAG Aviation, Logistics, and past 7-Eleven Retail could lead to neglected duties, poor risk management, or insider trading risks. Shareholders suffer if boards become rubber stamps. This fuels inequality. When politically connected figures dominate PLCs, it crowds out independent entrepreneurs and merit-based leaders. Malaysia's economy, already grappling with post-pandemic recovery, needs diverse voices, not a few insiders controlling key sectors. It perpetuates the old boys club mentality that's held us back. Now, international investors' perception: foreign funds pour billions into Malaysia, but they hate opacity. Studies show political connections heighten perceived risk, leading to higher capital costs and lower valuations. Investors from US, Europe, Singapore scan for cronyism signs. Farhash's roles signal potential political interference, deterring FDI. We've seen FDI dip during instability. This could worsen it. Case in point: corruption perceptions. 71% of Malaysians see government corruption as a big problem. International bodies like Transparency International factor in such overlaps when scoring our CPI. Malaysia's ranking has fluctuated. High-profile political business ties drag it down, making us less attractive than neighbors like Singapore. Anti-corruption watchdogs worldwide are watching. Groups like the OECD, World Bank, and anti-graft NGOs view concentrated power in ex-political aides as a governance risk. Farhash's involvement in probes, like the Sabah mineral exploration, cleared but controversial, amplifies scrutiny. Even cleared cases leave a stain. Investors factor in headline risk. Global examples: in Indonesia, political business entanglements led to investor flight during scandals. In Brazil, Operation Car Wash exposed similar issues, tanking markets. Malaysia risks the same if we ignore this. Foreign investors demand ESG standards. Political opacity fails the G in governance. Negative impacts compound. Lower FDI means fewer jobs, slower tech transfer, weaker ringgit. Our stock market could see volatility as funds pull out. Already, Bursa has underperformed peers. This doesn't help. Anti-corruption bodies might recommend sanctions or blacklists, hurting trade ties. From an investor lens, imagine a fund manager in London or New York reading about Farhash's rapid rise amid allegations, e.g., compared to Joe Low by critics. They'd think twice about Malaysian stocks, opting for Thailand or Vietnam instead. Perception is reality in finance. Solutions: strengthen Bursa oversight on directorship limits and disclosures. Mandate cooling off periods for ex-officials entering business. Empowerment for proactive probes. Shareholders demand accountability at AGMIS. Media, keep shining light. This isn't about one person, it's about systemic health. Malaysia deserves transparent, merit-driven leadership to attract global capital and build a fair economy. Malaysians must insist for transparency or risks having our country being ravaged again and again by corruption or abuse of power or both.